This conference will now be recorded.
Thank you, Cindy. Mr. Chair, I would call the meeting to order at 12:04 p.m. The first thing I would ask is, would there be a motion to approve the agenda?
So moved.
We have a motion by Dunn. Is there a second?
Second.
We have a second by DeVos. I'm just going to say all in favor, say aye.
Aye.
I got 4 ayes, approved agenda. Would anyone move the minutes from the June 25 meeting that were presented?
It'll make a motion to approve the minutes.
Motion by Johnson. Is there a second?
Dunn will second.
We have a second by Dunn. Any other noted corrections, alterations, or amendments? Hearing none, I will call roll for this one. Member Johnson?
Aye.
Member Dunn?
Aye.
Member DeVos?
Aye.
Member Favor?
Aye.
Thank you all. We have approved minutes. Unfinished business. As you reviewed the Guentzel Holdings loan request at the last meeting, I think all of you were aware that the finance proposed was that the bank and the SBA were doing 90%, and Chad was not presenting any funds into the program. I did report that he had some unidentified costs, and now we have identified them, and I did send out that new spreadsheet this morning. Mr. Guentzel has paid $2,500 down on that $99,900 purchase price, and he will be leaving that money in. As such, the city's loan request then had been reduced by that $2,500 to $75,000. Pardon me. Mr. Guentzel has also had to pay $1,500 to Anytime Fitness Corporate as they reviewed his relocation plans and specifications. And then we did identify he has $6,000 in development fees that would be paid to the city. That is legal and engineering expenses, as well as the actual on-site inspection of the installation of the public improvements, such as sewer, water, sidewalk, curb, and the construction of a small stormwater pond. So Chad did have what we've identified as $10,750 into the project. It's only 1.4%. The policy does suggest 10%. Given these unprecedented situation, and all of the business advice I'd heard is telling the businesses to hold on to your reserves, hoard your cash. So I felt very comfortable making that recommendation. Again, I think all of you were aware that the bank and SBA were doing 90%, but it was sent back to you just to have you reaffirm your decision. Chad has to enter into development agreement, so that's where that $6,000 comes. You'll see that when you discuss the bakery, that there is no development agreement because there's no public improvements like water, sewer, stormwater, sidewalk, and curb and gutter, etc. So first of all, I'd ask if there's any questions, and there's 4 of you, so just open your mic and if you have anything to say.
I think the mayor at the council meeting was just wanted to request that he was actually putting some money into it. It wasn't just all the loans.
That's what I got from it, Ed. We had said we had unidentified costs, and the mayor asked that we identify and quantify them. And so and he still may have some additional costs that he would bear that weren't included, but we have quantified then the $10,750.
And as far as you have a list of them when you come to council the next meeting, I'm sure there's not going to be a problem.
The council packet's already submitted to Todd, and it'll have that same spreadsheet that I presented in the email this morning.
Okay, thank you.
Are there other questions? If not, there had been a resolution prepared for your consideration that begins on page, I didn't have it in there, so we'll just have a motion to reaffirm your decision to make the recommendation to the council.
I would move forward for us to reaffirm with that variance understanding.
So that was a motion, James?
Yes.
Let's see if there's a second, and then if they'll have a discussion. Would anyone second the motion?
I'll second it.
We have a motion and a second. Now I would ask if there's any discussion, and I think it might have been Brad that had something to add.
No, I was just going to move the motion, but James did.
Okay, Mr. Favor, do you have any comments?
What was the rate on that? Is going to be on the level?
Yep, that's at US Prime, which was 3.25.
Yeah, I don't know if where's the appropriate time to discuss this. I'd probably not here now since there's a motion and a second, but it does impact the next two loans that we're going to consider. So if I could just, what has been our historical spread to prime, Russ? The EDA loans going back in time. Do you track that? Do you have a working knowledge of what our spread has historically been to prime?
Most of them have been in that 3.5% range. I did see prime spiked up last year, but we didn't make any loans that were tied to a prime rate. So that was a change. That was a change to the policy. I think it was made in 2016 at the request of Councilman Kwame, just so we'd have some consistency.
And what was the change then?
The change, we didn't have any specific. It was just on a case by case. So some were at 0%, some were at 3%. The Chippewa was at actually 6.5%. So the Councilman Kwame and other members didn't feel comfortable kind of having this pick a number out of a hat, and there was some thought that perhaps some were getting favorable terms while others perhaps weren't. But we still have the ability. Oh, excuse me.
What's the standard now then?
Now is the US Prime.
Okay.
For these loans out of the general fund, we still have the 0% that go to the heritage preservation properties.
Right, and that's what I recall back in the day was that we had our loan rates were significantly lower than prime, but now I see that they're at prime, so that answers my question then. So
okay, thank you, Mike. Are there other questions, other discussion regarding the motion? I already asked Brad and Mike. Ed, James, anything?
I was just going to say that I understand it is a variance from our policies, but I think that this isn't your standard. Well, it's not a standard situation because of what's going on with our economy due to COVID. And I don't think that this is necessarily the standard, say, first-time loan either. We're dealing with a person who has a long-standing track record of being a responsible and consistent member of the community and being a real member of our economy. So I'm totally in favor of a variance based upon those factors.
Thank you, James. Mr. Johnson?
I have nothing.
Okay. The motion was to reaffirm your decision and recommend the Guentzel Holdings loan. I would note that the change in the principal from $77,500 to $75,000, recognizing that Chad has already made the $2,500 down payment. I will call for a roll call on the motion, and I will start with Member Johnson.
Aye.
Member Dunn.
Aye.
Member DeVos.
Aye.
Member Favor.
Aye.
Thank you, gentlemen. The motion will be forwarded to the city. Corey, have you joined us by chance? Okay, I do see a caller 7 now, so but that might be the newspaper. So motion carried. That'll be presented to the city council. At this time, under new business then, 5 years ago in 2015, the city made a $500,000 note to Spring Touch as Spring Touch purchased the Ritt Street property from the city and then undertook a number of improvements. That note was set at 3%. It was set on a 20-year amortization, and it ballooned at 5%, which is at this time. The balance of the note is about $403,308 and change. Every payment has been made as due, when due, and in the amount due without a single exception, and there is an unblemished repayment history. At this time, Marv Kottke, the owner of Spring Touch, has requested, and we anticipated at the time that the loan was made, that there would be a request for a 5-year balloon extension, and you saw the correspondence from Mr. Kottke indicating as such. Marv reports that business remains solid, and he's joined us here, and I'll give him an opportunity to speak. My recommendation would be to provide the 5-year balloon extension as requested by the applicant. But then the note was put at a 5-year balloon to allow us to review the interest rate. And my recommendation would be to alter the terms of the loan to reflect the 3.25% of the US prime rate. Mr. Abels and Mr. Favor undertook a review of the financials submitted by Marv. Corey did report to me yesterday that it raised no concerns on his part. Mr. Favor, would you have any comment?
I would concur the same. Yes, no issues whatsoever.
Very good. Gentlemen, there is a resolution that's been prepared on page 10 for your consideration. Would anyone have any comments or questions, or would anyone be inclined to move? Oh, first of all, pardon me, Marv, would you have anything to add or any questions or comments?
No, thank you very much for allowing me to be here today, and we really appreciated getting the loan the first time, and it really has helped our business grow. And like we talked about, we anticipated that we would again have another 5-year extension on it, and if it's all possible to keep the rate the same, we'd greatly appreciate it with the economic times. But I'll put that on your behalf to decide what we should go with.
Yeah, you did see Marv's original request was under the same terms. But I would note that that is one of the reasons that Mr. Kwame at the time wanted a 5-year note, so that we could have that opportunity. Again, that resolution is prepared on page 10. It does recommend a 5-year extension, and then it does recommend the interest rate increase to the U.S. prime. All the other security, mortgage, etc., personal guarantee would remain in place. Would anyone be inclined to move the resolution on page 10?
This is Mike. I'll move the resolution, but Russ, for a future meeting, I'd like to ask you to put an agenda item on the interest rates. I have some issues with the way they're established right now, and I think it's worthy of some discussion. I don't agree personally that his rate should be going up in this situation, but that's how you've established the rates, or the council has. So if we have to live with that, we have to live with it, but it doesn't make sense to me personally.
You would have the opportunity, if you would choose to make a motion to not increase the interest, Mr. Favor, if that would be your choice.
Well, I'll make a motion accordingly then.
So you would make a motion to approve a 5-year balloon and keep all the other security in place and remove the interest rate increase, correct?
That is correct.
Okay, does everybody understand what the motion is, and would there be a second?
I will second that, Ed.
We have a motion by Favor, seconded by Johnson, to recommend a 5-year balloon extension and that all the remaining terms and conditions of the loan remain in place, including the security. I'll ask if there's any discussion, and I'll start with Member DeVos.
I agree with the interest rate revision, or with Mike's interest rate revision. We've made loan deferrals and such due to COVID-19. I think in normal times, pegging it to prime rate is a good policy, but I agree that right now we probably don't want to. Essentially, we don't want to be raising interest rates on people if we really don't need to.
Thank you. Member Johnson, do you have anything to add? Any questions, comments?
No questions.
Mr. Dunn?
I guess I agree with Mr. DeVos's comments that right now and I really don't have a strong opinion about increasing it. I guess I would have a question for Mr. Favor if it's because of COVID are his concerns, or if he has other concerns. I'd be a little bit more curious to know where his thoughts are.
Well, the thoughts relate to targeting it to prime. When prime is high, banks, will often, lend at prime, and the EDA has historically been a gap financer where our rates have generally fallen below, conventional bank financing. So if prime was at 6% today, or even say 5%, a good borrower, a bank would be, could be lending at prime or at 5%. So if we're targeting at the EDA our loans to prime, then there's going to be no spread potentially between the bank financing and the EDA financing. So as of right now, I don't have a major issue with that. But I think as time goes on and as rates move up, that could be an issue if we're targeting our rates to prime. So that's my general concern with it.
Thank you. And any questions for Mike or comments or reaction? I can see everybody shaking their head no, except you, Brad. Do you have anything to add or any questions for Mike? Or?
Well, like I said, I agree basically based off of the economic times we're in about not raising it. I do think we need I think if we do revise it, I do think we do need to have some standard. I'm open to debate as to whether it should be at prime or whether the city should come down under prime. But I do think overall, I think we do have to have some set standard expectation. So.
And I would like to just to clarify, I would too. I absolutely agree with the standard.
Great.
Just don't know if I don't really agree that prime should be the standard.
Sounds good. So it sounds
Anyone
like we're on the
else?
same page.
Okay, there is a motion and a second to recommend a 5-year loan extension and that all the remaining terms, loans, conditions, and security remain in place. I will do the roll call at this time, and I think I start with Member Dunn.
Aye.
Member Faber.
Aye.
Member DeVos.
Aye.
Member Johnson.
Aye.
Thank you. Motion carries. Marv, this item will be on the city council agenda for Monday night at 7 p.m. Typically, you don't have a role to play, but if you'd like to join the council as you had tonight on the phone, you'd be available if there's any questions, which I don't anticipate. But thank you, Marv. Thank you for your business. Congratulations on your 5 years in St. Peter, and we hope there's many, many more.
Yes, thank you very much.
Okay, gentlemen, the next item under new business would be a loan request from YCDHT LLC, which is the real estate holding company. The business operating is River Rock Bakery and Kitchen, and Christine Montana Rasmussen has joined us. Christine purchased the kitchen and the bakery assets and operations from Tamika Bertram of River Rock Coffee back in 2016. At that time, she received an EDA loan of $40,000 to partially finance that acquisition. All of the payments, again, have been made as due, when due, and in the amount due without exception. The note, however, at this moment is in that 4-month deferral that the council provided for COVID, but the note will pick back up here on August 1. That is secured by a promissory note, a mortgage filed against Ms. Rasmussen's private residence, since she wasn't, she was a tenant, a security agreement, and then a personal guarantee that was executed by Montana and her spouse. Again, all the payments have been made as scheduled. Earlier this year, in April of 2020, Ms. Rasmussen did receive a COVID-19 microloan of $10,000, which is at a 0% rate of interest, and the payment on that note is deferred, as they all are, until June of 2021. So that's Montana's history with the EDA. At this point, she would like to purchase the real estate that she has been occupying since 2016. The property is addressed as 2017 and 2019 Park Row. Given that the properties share a common wall and actually a doorway in the basement, they've been assembled as a single parcel and a single property. She would purchase that from the St. Peter Development Corporation, who certainly should be commended for the investment that they made into that property. That was the next demolition by neglect if there hadn't been an investment. That would have been the next mom and pops or a building of that nature that would have collapsed upon themselves. So they did spend a considerable amount of money to make some significant improvements to the property. The purchase price is set at $420,000. This also would work with the SBA 504 program, and SBA would anticipate approximately $10,000 in fees. The proposed financing from this one would include, again, because of that SBA guarantee and the benefit of that participation, it's proposed that First National Bank and the SBA, again, do 90% of the loan, with First National Bank doing 210,000, SBA doing 172,000. That leaves 10. And again, the policy would again suggest that the applicant provide 10%, but given the situation and the recommendation that they maintain reserves and cash, I've structured this that Montana Rasmussen, the applicant, would contribute 5% or 21,500 to match that of the EDA loan, which would be 5% and $21,500, which would be 5% of the loan or program cost. There was an appraisal of the structures that was completed in March of 2020, and that established a price of, I think it was $440,000. The total mortgages that would be recorded would total $408,500, so they would be covered by the appraised value. There is cash flow of the real estate that's on page 21. The two properties have ground floor commercial space in each building. And again, River Rock Bakery and Kitchen, Ms. Rasmussen's operating business is in the storefront of 2019. And then Park Row Nutrition is in 2017. There are two apartments above 2019, or 219, and one apartment above 217. Both or all three are leased and occupied. It does show that the property would have a positive cash flow. On this loan, the financial review of the Rasmussen household, of River Rock Bakery and Kitchen, and of the LLC were all reviewed by Mr. Abels and myself in this instance. Given that Mr. Southworth was on vacation and Mr. Favors Bank is participating or proposed to participate, it was Corey and I. Again, Corey is not here. Yesterday, I asked him if he had any concerns or qualifications on this loan, and again, he said he had none. My review didn't indicate anything that would suggest Ms. Rasmussen is creditworthy or that the note would be in any particular peril or jeopardy. So again, the recommendation would be that the city provide a $21,500 revolving loan fund at the 3.25% of U.S. prime. There are two then variations from the loan guidelines again. One is that Ms. Rasmussen would only be requested to put in 5%, where the loan guidelines would suggest 10. And the second would be, again, because of SBA's participation and the benefits of that it would be on this one on a straight 25-year amortization. That is a requirement of the SBA. So, the payments would be minuscule to the EDA. But again, we don't have a choice. If you were to participate, the SBA would require that you do match that 25-year amortization. If approved, it would be proposed that the note would be subject to a promissory note, as well as then a subordinate mortgage filed against the two properties, subordinate to the mortgage held by First National Bank, and then the mortgage that would be held by the SBA 504 program. Also, the note would be secured by a personal guarantee executed by Ms. Rasmussen and her spouse. There is a resolution that I prepared on page 25 and 26, but first I'd ask if Montana, you would like to make a statement or have something to add?
Sure. Just thank you so much for reviewing and considering our application, and thank you for all the help in the past. I feel very fortunate to be able to work with the EDA in the past and hopefully on this project as well. So thank you for your time.
I'd ask if I'm going to go around the horn here and see if there's questions for myself or Montana, or if you have statements or concerns. And I'm going to start with Mr. Favor. Oh, sorry, Mike, you're not supposed to participate in the discussion, being you're the participating bank. And I will explain that
corporation, so I have to abstain twice and some of the seller.
Yes, thanks, Mike. I forgot about that. Yes, so Mr. Favor needs to abstain, and that would mean that he would abstain from discussions unless there were a question regarding the bank participation. So, Mr. DeVos, comments, questions, concerns?
Well, my question would be, because we'll go back to Mr. Guentzel's request. We made the exception to the 10%. The main reason is that, you know, he's an existing business who's losing his place of business. If we didn't approve it and it went under, basically he didn't have a place to go. So I do have a question for Montana. What are the consequences? Are you going to continue to rent there, or what are the consequences of not receiving the EDA portion of the loan, or of us not requesting 10% on it?
Sure. My plan is the reason that I would like to purchase the building is to secure our future there for a long time. And my goal with going with the EDA, and the reason for not putting down the 10% is just trying to keep as much cash on hand as possible during these times where there's so much uncertainty. We would love to just have that extra cushion, and we were hoping that the EDA could provide that gap funding just to help us feel a little bit more secure.
Okay. I'm okay with being flexible on it. I was with an organization for many years who had got quite a bit of flexibility from the EDA. I will give a warning that there might be pushback from the city council on this one, just simply from the fact of they might just say, why don't you continue to rent? So I'm just giving you a heads up on that there might be pushback from that perspective, as opposed to the Anytime Fitness, who they didn't have an option of continuing to rent in their current location. So I just wanted to give you that heads up that they may run into that on the city council.
Okay.
That's all I have.
Ed, comments, questions?
I have no questions.
Mr. Dunn?
I don't have any questions.
Okay. And again, Mr. Favor needs to abstain, given his participation on two ends here. Again, there is a resolution that had been prepared for your consideration that would recommend the loan at the 3.25 with personal guarantee, the subordinate mortgage. And again, the two variations from the guidelines. And the guidelines are established by the council and the EDA. So they are truly your guidelines. It is not a requirement of the state financing program, but there would be two exceptions. One would be Montana would have 5% into the project rather than the 10% suggested by the guidelines. The second would be that it would be a 25-year straight amortization. And again, the guidelines would suggest that it would be done on a 20 with a 5-year balloon. Would any of the three members eligible make the motion or an alternative motion?
I will make the motion.
Brad will move.
Oh.
Brad will second.
All right, we have a motion by Brad. Ed, was that a second?
Yep, I'll second it.
And now everybody, it looks like, throws up on my end. James?
I'm still here. Can you hear me?
Pardon me, I'm going to log out really quick. Cindy, tell him I'm put in the chat that Russ is going to log out.
We can
Now
hear
you
him.
can hear me, I guess. Sorry about that.
Yep.
Ed,
Yep,
was
we
that
can
a
hear you.
second?
Yes, that was a second.
Okay, we have a motion and a second. If you have any discussion, just go ahead. Hearing none, then I will call the roll, and I would start with Mr. Dunn.
Aye.
Mr. DeVos.
Aye.
Mr. Johnson.
Aye.
Okay, we needed a majority of those voting, so the motion did carry. Again, this will be considered by the city council.
Hey, Russ, can I make a comment to follow up Brad's comment about how the council might react to this?
On Monday night at 7. Thank you, Montana, for your business in our community, and we will intend to see you or hear from you on Monday.
Can I make
Russ,
excuse
did
me?
you hear Mike?
Can you hear me? Russ?
Go ahead, Mike.
Well, I just want to make a comment that
Yep,
You
I can
know,
hear you, but you might not be able to hear me.
no, I can hear you. So the question was, well, why, what's
Okay.
what's the benefit? I mean, if Montana can just rent, and what's the benefit to the community if she owns that building, or if she rents, that somebody's still going to own the building? Well, if you think about what Russ said, this building was destined to be condemned. And what did you say, tore down? The Development Corp came in and, did an incredible job remodeling this building, renovating it, and making it, a nice asset to the community. If Montana just rents from us, our assets are tied up and they cannot be further deployed into the community. If she buys this building, our assets are then freed up and we can commit them to other projects similar to this potentially, or other types of projects that we can benefit the community by. So there's a huge difference between Montana renting and Montana owning. So I'd just like to leave that comment. And if you would pass that on. Excuse me?
I will. That's a great explanation, Mike. I appreciate that, because that's actually a really great explanation. So
thank you.
Yeah, and I could second that too. The Development Corp's intent was to improve the building and then flip it. Fill it and then flip it and sell it with occupied leases. So, and they have been, like I said, they should be commended for stepping up in this case. And they did a dutiful job on renovating and getting those buildings in pristine shape again. So thank you, Mike.
You bet.
I'm going to jump to my reports. Tomorrow I'll be distributing the 50th COVID-19 microloan. And at that point, we'll have about $465,000 on the street helping the business community. The Chamber of Commerce, the City Council did approve that $10,000 marketing fund, and I've talked to Ed Lee, and he will provide a report when half the funds are expended as the EDA had requested. And then at the end, he will provide a full report to both the EDA, and the City Council. And the only other thing I would add to the reports is I think everybody's well aware of Governor Walz's executive order requiring the mandatory wearing of masks that takes effect on Saturday. It still is on the City Council agenda for Monday, but from what I'm hearing, it certainly may be removed from the agenda given that the governor's order has taken effect or will take effect. So I'd ask if there's any questions for me. Hearing none, would there be a motion to adjourn?
Ed will make a motion to adjourn.
Second by
motion Johnson to adjourn, seconded by Dunn. I'll say all in favor, say aye.
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 Thank you, gentlemen. We are adjourned. Cindy, you can stop the recording.
Hey, Russ, if we could, I would like to have a conversation about our interest rate structure, though, in a future meeting. I think it's worth, because we're finding ourselves in some really unusual interest rate environments here lately, the last couple of years. And, rates do weird things. And, just when you think you have it figured out, then they change on you. And so I think we really do need to look at how we structure our rates relative to bank financing. So I'd be happy to put some thoughts together for that agenda item if you are so willing to include it.
Yeah, well, I think we're pretty open to get anything on the agenda if a member feels it's worthy of our discussion. So Cindy will make a note to make sure that we add that for new business. And if you would like to write some of your thoughts down, Mike, and get them to us.
And I'll visit with Corey and Bob as to what this is going to entail, and then have them come with their own thoughts too as well. I'm sure they'll be kind of similar to mine, but I can't say that for sure.
Well, I think that's one of the benefits of having professional private lenders on the EDA is we can get some of that insight that you gentlemen have developed over your career.
Yep. So. Sounds good. Thank you.
Okay, thank you all. Everybody have a great afternoon. Stay safe and warm, or safe and well.